Welcome back. An upbeat showing from all of Sanlam's divisions has given it a boost. In the annual period, Africa's biggest insurer delivered a 48% jump in headline earnings per share, which allowed it to lift its dividend by 11% to 400 cents. We're now joined by the company's financial director, Abigail Mukhuba. Thank you so much for your time, Abigail. A year of records. Was this a normalization in earnings or a new phase of growth?
We would like to believe it's a new phase of growth. We want to continue on the same trend in terms of growth into the future. It is, I like how you put it, it's a record year for us. I think internally, even our staff this afternoon, they're very happy with the performance that we've delivered in the year.
Yeah. You say that the value of new business benefited from a shift in sales mix to more profitable product lines. What consumer demand does this speak to?
It pretty much talks to, as an example, our funeral cover business. That is quite a high margin business. But also, if you look at on our retail affluent business, our annuity business is also a high margin business. So that also contributed. Also, I think overall, if you look at the mix geographically between what we've got in the South Africa business as well as what we've got in our Sanlam Alliance JV in the Pan-Africa business, that also contributed quite well. So overall, I would say it's quite a few lines of business that one would look at in terms of contribution to our VNB margins.
Yeah. Well, actually, talking about Sanlam Alliance, that is the Africa operations outside of South Africa, right? Did those regions perform in line with expectations?
Yes, they've performed in line with expectations. Some of them have performed even better than what we had expected. And we're very pleased that the whole integration of that business is kicking off very well. Obviously, they've only contributed for 3 months in the 12-month period because that JV only became live in the 1st of October 2023. I think obviously there was a bit of a offsetting in terms of some of the currency issues that we've seen, particularly the devaluation of the Egyptian pound that has now impacted on some of the business. But overall, underlying, we've seen very positive performance. We've seen their underwriting margins, particularly in the general insurance business, getting back to levels within target range, which is a better performance than what we saw over the last 2 years.
Well, as we're still on this topic of geographical performance, let's go to Asia. Just shed some light on that. I do understand also that there was some downward pressure in Malaysia.
Yes, there was downward pressure in Malaysia, but a lot of that business is not quite as material in terms of the overall big group. We are excited about the India operations on the other hand, because that's become quite a sizable contributor to our bottom line, both from an earnings perspective, but also from an enterprise value into the group. So I think if you're then talking about the Asia story, I think it's more of an India story than a Malaysia story. Reason for the Malaysia, let's say, muted performance is probably more linked to, as you started at the beginning, you made introduction to say it's a tough economic environment globally. And our Malaysia market is also feeling that pinch. And the competition is quite tough in Malaysia, but it's not a material contributor to the overall group.
Well, yeah, as we're talking about this tough economic environment, I mean, as much as this is a good news story, solid numbers, we can't ignore the constrained consumer. And of course, you've mentioned the downward pressure in Malaysia, but just looking at South Africa and maybe just Africa as a whole, how have the, how has the constrained the consumer environment, the consumer headwinds played out in your business, and how significant or negligible are they?
We're seeing that obviously you've got continued high inflation that has stuck and that continues to put pressure on consumers' disposable income. But I'm starting to sound like a broken record when I say that I think the experience that most consumers have gone through during the COVID period continues to make us, or as consumers, people are hesitant to let go of some of their products, particularly things like life cover, funeral cover, and some of their annuity products. In terms of general insurance, you will see that people tend to repurpose or reprofile their cover. So it's not so much that they're cancelling it, but that they are repackaging it. And that's where you pick up the impact of the pressure on the consumers. But overall, you also see in our retail mass cluster, the business that we call entry-level cluster, that one is the one that's mostly impacted. I think affordability there shows a lot of strain. And because of that, you see what we call persistency. You see that there's the level at which people hold on to their products. It's especially in the short term, you end up seeing high lapse rates in the short term. And that's how the tough environment condition plays out.
Yeah. Well, actually, are there any macroeconomic headwinds that you are looking at keenly that could maybe disturb this earnings momentum that we have seen in this period?
I mean, from a headwinds perspective, overall economic growth, if you look at South Africa as an example, our outlook in terms of economic growth as a country is quite low if you look at the statistics that are shown. And that has a direct impact, obviously, on availability and access to disposable income that people have. So when you've got an environment that has such a low economic growth, competition is quite tough, but it's also good for the customer because then you have to provide value-adding services. But as a whole, I think the biggest challenge for us is to say that if there's limited opportunities for growth, that has an impact on our bottom line. I think also overall, if you look at items that impact that economic growth, one would want to see a turnaround. For example, I mean, we all know in South Africa, issues of availability of electricity also directly impacts that economic growth. So those are some of the headwinds that we're having to deal with.
All right. Well, in the short to medium term, are there any strategy moves that we can expect from Sanlam, and particularly when it comes to the full absorption of the Allianz JV?
I think ultimately it's all about, in the short term, we have to concentrate on integrating the businesses. It's a lot of operations. We have circa 30 countries that we have combined together that we now have to integrate and get to realize the synergies that we saw when we went into the transaction. So it's really about concentrating on the core performance of the business. I think the management teams around the different regions and the different countries, they are well aware of their targets that they have to meet, and they are aligned in terms of trying to make sure that we achieve same goal. But everybody is focused on let's now deliver on the integration.
All right. Well, thank you so much for your time and just giving us more detail on those numbers that we saw coming out of Sanlam. That was the Financial Director, Abigail Mukhuba.